Hello and welcome to Virtual Investor Conferences. My name is Phil Carlson, and on behalf of KCSA Strategic Communications, as well as our co-host OTC Markets Group, we're very pleased you've joined us for a presentation from KDLY MD, a patient-first healthcare and healthcare data company uniquely integrating traditional primary care and pain management strategies with integrated behavioral and alternative therapies. Please note you can submit questions for the presenter in the box to the left of the slides. You can also view the company's availability for one-on-one meetings through the Scheduled Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Tim Pickett, founder and CEO of KDLY MD, which trades on the NASDAQ under the symbol KDLY. Welcome, Tim.
Thank you, Phil. I'm really glad to be here and introduce KDLY MD to you all, and happy to answer any questions that you have. Like Phil said, just put those in the chat. Typically, I'll get to those at the end of the presentation, and let me just go ahead and get started. So a couple of disclaimers here. We did list and successfully IPO on the NASDAQ. We started trading last week on Friday. And my background, my name is Tim Pickett. I'm the founder and CEO of KDLY MD. We started, my background is in clinical medicine and hospital medicine. I spent 10 years in GI surgery and critical care and emergency medicine. Essentially, people would come in to us broken. We would fix them, and we would have to put them on a lot of pain medicine, which in the acute setting is very useful. But I saw the burden of my own practice and the practice of my group in the opioid space. And so when the Utah Medical Cannabis Program started in 2018 here, and in 2019, I started seeing patients with the original plan to build the largest network of medical cannabis recommending providers and provide education, incorporating traditional healthcare standards into that system, because as a hospital clinician and somebody who needed an algorithm to provide medical cannabis recommendations, there is no algorithm for its use in medicine in the traditional space. There's no way for us to use it in the hospital, and that's really necessary. So I got into this with the vision of creating that network and creating that algorithm, incorporating all the data that we receive from our patients into that system. So KDLY MD essentially is a healthcare company, right? We employ our own physicians and PAs and nurse practitioners, and we incorporate the traditional standards of healthcare and reimbursement, specifically Medicare, Medicaid, the big, we are contracting with the big insurance providers, Blue Cross Blue Shield and United, and Select Health here in Utah. We take that traditional structure, we add behavioral health to it at the point of care, and we add alternative medicine, specifically right now, medical cannabis. And we're unique in that space because we integrate all of those things, and we receive reimbursement from insurers to do just that. So it's something that's not offered. And through that process, we collect a significant amount of data on the patients, which I'll talk about coming up. So to date, we have served just over 60,000 patient visits. We service just about 20% of the patients who require and use medical cannabis here in Utah. We're the largest provider of that medical service here in Utah. We accept insurance. We announced today on a press release that we have been contracted with Select Health, the largest of the insurance carriers here in Utah, Medicare and Medicaid, and we have been receiving reimbursement for these services. We finished an IPO of just under $7 million raise here last week. The market that we serve is pretty massive. The opioid epidemic it continues to be a huge problem in the U.S. There's a lot of grant money out there for the opioid programs. 100,000 people roughly die every year of this problem. And as the population ages, the opioid space is slated to continue to grow, right? There will be more patients who get knee replacements and hip replacements. And so as that space grows, our demand for our services will continue to grow. There's a lot of demand now, and we expect demand to continue to grow. The medical cannabis space is slated to really blow up as well. And currently here in Utah, there's about 80 to 85,000 medical cannabis patients, but that number continues to grow. And as the DEA reschedules cannabis to a class 3 medication, validating our service, we expect that demand to really increase with that continued validation that there is a medical use for cannabis, and that will bring people. It continues to bring people through the door. Most of our patients find us through online search and word of mouth. We find that a lot of patients are not telling the truth to their healthcare provider, their primary care provider, or even their chronic pain provider. And they like to come to us because they can tell us exactly what they're actually using, and we can help them get access to medical cannabis through a recommendation or a certification. We can incorporate that into their care plan, and we also deal with their mental health at the same time, which ends up being very, very important for our outcomes. We also know that the barrier to entry into this space is very high. We have to be experts at not only the prescribing regulations of prescribing controlled substances inside the healthcare space, like Percocet and oxycodone for our chronic pain patients, but also that regulatory environment for medical cannabis, which currently is still Schedule 1. So that barrier to entry and managing these Medicare contracts is very high, which we feel like we're ahead of the game as far as being able to access this for patients, for investors, right, kind of at the cusp of while the government is catching up, so to speak, to the population in the U.S. So our core model is, these are our core values, and our core model is such that a patient comes into our clinic, they visit with the prescriber for a 15-20-minute visit, just like you would at a normal doctor's office. You also visit with our BHC, a behavioral health clinician, at the same point of care. That's a 15 or 20-minute visit, not a full therapy visit. We bill both of those visits to the insurer and receive reimbursement for both of those visits at the same time, enhancing our revenue for what we offer. We then collect a significant amount of data around those visits. So we collect our clinical notes. We have access to what we're prescribing and what they're filling electronically from a prescription standpoint. We have access to every single purchase they make in the medical cannabis system. Those patients, we know what they're purchasing. We know what they're using through survey data. We also have the clinician's notes for the behavioral side, which are very paragraphical and story-like. And we collect a lot of data on why and how these patients are using these therapies, these medications, and medical cannabis in their treatment program. About 7% of our revenue comes from telemedicine. The rest comes from in-person clinic visits. We expect that telemedicine will continue to grow, albeit slowly. It's not a core part of our business model because our patients require face-to-face visits very frequently because of the regulations around opioid prescribing and medical cannabis here in Utah. And that requires patients to come in every month. So our model is very, very sticky from a patient revenue standpoint. These patients are coming back every month, every 2 months, every 3 months. We're building relationships with them. That gives us much better revenue over time. It also gives us better outcomes for patients, and it gives us more data because those visits are more frequent. We run 4 clinics currently in northern Utah. Here's a breakdown of our clinics. Currently, we have a flagship clinic in Salt Lake City. That clinic is built as much as a training facility as a real live working clinic. About half of our revenue comes through that clinic. We anticipate with our merger and acquisition strategy that we will be bringing in staff and clinicians into our flagship location. We'll train them on this model, and then we'll put them back in their original location to overlay our model, the Kindly MD model, onto those clinics as we roll up in our acquisition strategy. We then have 3 other clinics along the Wasatch Front, which we're preparing to expand with the proceeds from the recent IPO. Other service options that we offer, although we're not specifically targeting these service options, we do bill for these and get reimbursement. A lot of patients will come in for one thing, they find our model very enticing, and we're very accepting of them, and we'll continue to care for them on primary care and weight loss. We may not target these types of clinics right now, but it's something that in the future, as we expand our reach, we can access because we can receive reimbursement and we can care for these patients in a lot of other ways. So our complete care I've kind of described, right? That patient comes in, they see the prescriber, they see the BHC, and then we have therapy on top of that we can offer later. So we're set up for this model where we can eventually do guided therapy as well, but all under this reimbursement model. Again, the data opportunity is really significant. Typically, data is sold, anonymized healthcare data is sold for between $5 and $8 per visit. That doesn't incorporate any cannabis data because there really isn't any data out there that involves or includes that medical cannabis piece. So we know our data will be very valuable. In our S1 that we filed, we had a use of proceeds allocation to categorize all of this data. Our plan is about 12 to 18 months to be able to start monetizing this data throughout the market. And we anticipate that with the rescheduling, there will be a lot more opportunity to use that data and to collect, potentially there may even be federal grants around collecting this data for use to build those algorithms that healthcare really needs to use medical cannabis in the traditional healthcare space. One of the very simple uses of our data that we did in 2022, for example, was simply a survey we did for our existing patients. And we find that 40% of our patients are reducing the use of an entire medication within 6 months. So we're just showing that, this is a very simple way to show that we can use our data to prove that the model is working, and then we can reproduce this model and overlay it into our acquisitions and our growth. Our leadership team is specifically built around this strategy. Adam Cox has a lot of experience evaluating clinics and overlaying new systems into those clinics that he did with a major national healthcare organization. And Jared is a healthcare finance expert. We can look at a clinic that exists. We can see what codes they're billing, how often they're billing those codes, and we can anticipate what revenue enhancement we can provide that clinic after the acquisition, before the acquisition. Christian Robinson is our public company finance expert, has a lot of background in public company finance, and also has experience in the finance sector of the cannabis space. So we bank normally. We are a healthcare company that accepts HSA cards. We do not touch the cannabis plant. However, we do have to explain that, and we did have to explain that to the NASDAQ in a big legal way in order to prove that we're not criminals. We abide by. We have a federally compliant program, but it's important to have that experience on our team. Amy Powell is a 20-year clinician at the University of Utah Medical School and brings that academic research and academic protocol and structure to our research so that we're doing this in a way that is beneficial but also follows traditional guidelines. And Gary Seelhorst has a reputation around the country for being very good at navigating the regulatory environment of medical cannabis, sits on boards in multiple states, and has been key in our relationships as we look to the future and expanding outside of Salt Lake City and outside of Utah. Our financial summary year over year. So we grew and were profitable 2020 and 2021, 2022 to 2023. Our revenue was very flat. We are pretty proud of this actually because we have begun the transition from all cash pay to a reimbursement model. And that model required a lot of investment. It's a lot of time and energy to navigate these contracts through Medicare, Medicaid, and these other health payers. And we also pursued an IPO, which, as many of you know, is a very expensive and laborious process. So being able to reduce our expenses year over year while maintaining revenue has been it was a great milestone for us. We anticipate our goal over the first 12 months, as you were, for revenue is about 10 million. That's our goal for after our IPO, our recent IPO. So the future of us, our growth strategy is really fourfold. It's 3.5-fold. One's not mentioned here, but I'll mention it. The reimbursement model, enhancing that, growing our contracts through Blue Cross Blue Shield and Cigna and United, finalizing those contracts, finalizing our relationship with the VA, where we receive some referrals from the justice court system, and we're working with them on how they can refer patients to us. Mergers and acquisitions, I think, is that's a primary way we're going to go. Rolling up primarily pain clinics that we can acquire. We will then overlay our model onto those existing, usually cash flow positive clinics, and we can acquire clinics over time. That it helps us grow faster and collect more data faster. Clinics typically are purchased between 2 and 5 times EBITDA here in Utah, and we're in early conversations with 3 clinics in various sizes between 3 million revenue a year and 13 million revenue a year on those acquisition targets. We plan to stay here in Utah for 12 to 24 months. There is plenty of expansion opportunity here in Utah. There's a lot of opioid problem here before we go outside of Utah, although we do anticipate that we will target another state and multiple states to expand. But you have to understand the regulatory environment of prescribing and the DEA and insurance reimbursement, as well as the medical cannabis space wherever we go. And then that data collection is another aspect of our revenue growth. So 12 to 18 months is our target to begin monetizing that data after categorizing it and organizing it for the next 12 months. The thing that's not listed here, but is listed on our S1, is federal grants, especially now with the DEA rescheduling. There'll be an opportunity to enhance that federal grant program. We are eligible for those grants. And we have been working towards that eligibility and applying for those grants as we've moved forward, because it's a key legitimizer for the business model. And it also gives us access to be a part of and a leading part of that conversation to, again, bring this algorithm and bring this data to the system so that companies know, what to produce and how to use those products that they're producing. Our milestones are to leverage those existing and new contracts in insurance reimbursement to introduce at least 5,000 new patients to our treatment plan in the next 12 months, acquire a clinic, and begin one additional greenfield growth clinic here in northern Utah, and then again categorizing that data. An investment in Kindly MD is an investment in this mission. Because there really is a mission to legitimize medical cannabis. I believe that the market for medical cannabis in treatment plans is not near exposed yet. There are so many patients. If you think about, you have Tylenol in your cupboard for a fever, you have ibuprofen for a headache, and you know, where is the tincture of THC or cannabis oil for the backache or for the sleep? And that's really how basic I view this project. And there's so many more people by which, when we legitimize it with white coats and in clinic, are open to it and are really seeking it out to help their condition and to get rid of the Ambien and the Percocet that they're on. So there's more demand than meets the eye, in our opinion, from a legitimate space, and we see that with our patients coming in. So that's the vision of Kindly MD, is to really be on the front edge of that push to legitimize medical cannabis in as a medicine. Okay, so that is the presentation, and I'm going to go back to questions. So, does Medicare reimburse for our services? So, absolutely, yes. So we receive reimbursement from Medicare, and we receive reimbursement for Medicare in relation to the entire treatment plan. So medical cannabis may not be the only piece of that treatment plan. It may include prescription medications and labs and therapy and BHC coaching and nutritional counseling and support. And we are receiving reimbursement for that. Are we using medical cannabis recommendations out in the open, as part of our draw for people? Yes. And people are seeking us out for that, and we're receiving reimbursement for that. Can we expand interstate? So the second question is, and the answer is absolutely yes. So even with Schedule 1, we've been doing this for 4 years. We can do this in other states. We can, for example, we could target Texas, where there is a nascent or a non-existent medical cannabis program, but there's plenty of opioid problems there. We can go to Texas. We can acquire clinics. We can build pain clinics and overlay our model. We can educate about medical cannabis legally under federal law in any state. And we can actually help, like we have helped lobby for better legislation around medical cannabis here in Utah. And I've lobbied, for example, in North Carolina. And we can help the legislatures build those cannabis programs under something that they feel a little better about, because we're clinicians and we bring a legitimacy to the program that we feel like they appreciate, and we feel like we can be part of the conversation separate from the industry and give a better face to the cannabis space with much more legitimacy. We do tend to target, and we think we will continue to target conservative states with medical programs primarily. Adult use programs, if you look at California, kind of a messy political and regulatory environment, that might not be the best place for something like this, a project like this. But Georgia, Texas, the Carolinas, these are places that are very open for us. Again, remember, we have to navigate the prescribing rules. That's another level, right? It keeps our competition potentially out and gives us an opportunity to go there. How does reclass from Schedule 1 to Schedule 3 impact our business? So it affects us by, primarily, in my opinion, it validates our process. It validates what we're doing for patients. It validates our model, and being ahead of the curve and being in front. We believe that really helps this investment opportunity, frankly. As it moves to Schedule 3, we will continue, we may not write recommendations for medical cannabis. We may be able to write prescriptions for medical cannabis. Insurers are still not going to cover the medicine, right? They're not going to cover the cannabis product, but it will be a little easier for us to navigate those insurance contracts. And it will, again, validate the model. It opens up federal grant money and funding for research and expansion to rural areas for underserved individuals as well, which we're primed and ready for as well. So we're looking forward not only to the process, and being involved in that legitimizing of medical cannabis as it's rescheduled, but it doesn't hinder our ability to grow one way or the other. We feel like the Schedule 3, we're ready for that, where a lot of people aren't. And so we're really excited for that piece. How do I acquire patients? Our GPs referring patients. So most of our patients currently come to us from online search or word of mouth. And that's currently how we get them. We also get referrals from specialists primarily. So, or GPs that don't know anything about medical cannabis. Remember, only about one in 10 clinicians in the US understand and are willing to use medical cannabis as a treatment, as a part of their treatment plan. So even primary care providers will refer to us in patients who need that support and that education. But we receive a lot of referrals from specialists, who primarily surgeons, and even pain providers who are proceduralists, who don't want to deal with the patients who are chronic opioid users, and they know their patients have some underlying mental health disorder that they need help with, and so they need a little bit more support. We believe that patients who are filling a little early or are struggling with that opioid, they don't need less. They don't need to be kicked out of programs. They need more support. So we bring them in closer. We see them more frequently. From an outcome perspective, that improves the outcomes. It improves our referral rates. It improves our ability to collect data. And from a revenue standpoint, that's good because we see them more, or we get more reimbursement. And it works out. It's a kind of a win-win, situation. We're excited to acquire clinics, frankly, that are distressed, because we know our model has more demand and can turn a distressed clinic into a very efficient clinic. So, and one with a very good reputation. So we're looking forward to getting discounts on those clinics, and then overlaying and expanding our revenue, and expanding our referral network through those acquisitions as well. Thoughts on Kindly current stock price, undervalued, overvalued, and why? So great question. Thank you. So it's my understanding that most IPOs trade down, and ours is no different. I believe that the current price is significantly undervalued. So reaching our milestones, expanding revenue. Traditional healthcare is a good business. It's a money-making business. Our target is 15 to 20% EBITDA. We are targeting cash flow positivity, within the 12 to 24 month range. We're not a tech company that is going to burn cash, for a significant period of time. I cut my teeth in when the world ended the first time in 2008. And I do not like to burn money. So our goal is revenue growth. And are we comfortable with the stock price right now? No, I'm certainly working hard to make sure that we have the value that I think that we deserve. But on the other hand, good financials and good results from business is going to take care of the stock price. So I have a dual focus, certainly. And one of those focuses is to, get those acquisitions done, grow revenue, and prove that the stock price is low for what the value is. We see this company as potentially $1 billion company one day. We know we can roll up a lot of clinics, and we know we have the capability to do that. And I'm just excited to be over the line, to be in the capital market system, and prove that we can do it, and we will. That is the end of the questions, and kind of ends up being perfect timing with the end of the presentation. So you can reach me at investors@kindlymd.com. You can visit our page at kindlymd.com. We have educational material that you can link to through there. Please feel free. I'm open for meetings. I want to be available as a CFO. I think this is something new for the marketplace and new for potentially the cannabis space, right? With a healthcare company. So I'm excited to speak to any of you that need additional information. But thanks for your time.